Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for quiet, to me at least it is, Thursday, September 5th, 2024. You know, it's about 6 p.m. and I wasted my day today because I don't know what to write about. And I certainly don't want you putting out new type trades today. Why? Tomorrow's the all-important day. You're going to get the jobs report. And how the market reacts to it, well, that's what we're all waiting to see. Before I get going on any of that and give you the day's news, let's take a look, if we could, and remind you. The 3-month special, my Labor Day special, ends this coming Sunday. So if you don't take advantage now, it ends. Could be first thing in the morning Sunday. Instead of paying in the futures markets for my twice daily updates, my morning subscriber video, access to special reports, and the special intraday updates I put out, and I do, they're not every day, but I do put them out, instead of $60 a month, $99 for 3 months. So you save almost, what, $90 there. The 3-month special for the combo. What's a combo? Some people just want the morning subscriber video and the ETF video. Example, I'm looking at gold from the long side. Is it better off in the GLD or am I better off in the futures? Well, I showed the differences between the two in the videos, and sometimes it's one or the other. Other times it's both, but play it that way. That's the combination of that. If you just want the morning futures video, instead of $45, $29 for 3 months, and $46, nope, $32 for the ETF only. Again, move your cursor up here. So the elephant in the room tomorrow is going to be the report. And I wanted to get to it. I want to make that larger for you. Here we go. There we are. So let's talk about this. You get the payroll data report at 7:30. When we take a look at it, the July numbers were 114,000. The market thinks that with all the adjustments, we're going to get a higher number of 160. Remember, we had radical adjustments. You do recall that, I pray. All right, it's done once a year. Actually, it's done in August, and they'll do another series in January and, February. So there's 2 parts to that. So let's talk and stop right there. Market gets 114,000 again. I think the Fed goes 50 basis points. They saw today the ADP number come in at 99,000. They were hoping it was 145. That was the trade estimate, so that's what the estimate on the street was. We saw the JOLTS report lose 450,000 jobs. If this comes in under the estimate, and that's how I'm going to look at it, you've got your definitive weakening, and maybe it's too much all at one time. So I think the Fed would go 50 basis points. Come in at 160, now flip a coin. Does the Fed say, well, we have enough from everything else? Or does it say, no, after the adjustments, the market's picked up a little, maybe we should just go 25 basis points? You're going to see the adjustment in the August jobless rate. They're not looking for an increase. They're looking for a decrease to 4.2%. Make it 4.3. Make this to 114 or close to it. I still think 50 then. Stay away and come in as the markets are. The 25's in play for the cut. And hourly earnings are expected up 0.3. That's where you're at. Now, where are we in terms of markets? And I think that's going to be your next important thing. You're in the weak time of the year for the stock indices. September's notoriously bad. So's often October. It's November that you get your terms. You're watching a rush, and I want to make this clear, a rush, like $100 billion worth of a rush in corporate debt hitting the marketplace. Why? Because while the Fed hasn't made its cut, the marketplace is doing it for it. And the market prices itself off what the bonds, the notes, 2 years, 5s, 10s are doing. And yes, corporate debt's priced a bit higher, but there's a ratio that it uses. They're running to it because the market's already there and these people want to lock something in. So you're seeing that. What else do we have? We have fear. All right, it's really simple. Is the market going into a recession? The 10-year note is back to even. As it goes the other way, history points that the market often goes into a recession. Now, Some may argue the pandemic, COVID, changed everything, and what was and the reasons it happened aren't quite the same that they were. I've read all the stories on that, and I'm not discarding them. I don't know. What I know is, from that point of view, defensive-wise, I like the gold market. I don't like the stock indices at this point. I think you look to go short at this point. On the energy markets, we had them come out, and I said this morning that I thought that they had to come out right away and say they're not going with production hikes in October, and they did. The OPEC Plus said, nope, for 2 more months, no hikes, and they'll judge the market. So that offered a bit of support. Got to get careful on cattle. The cattle chart fell hard today, and I'm going, what is going on? The chart pattern was bullish, and then I read the report that came out. Anthrax, believe it or not, you haven't had a case of anthrax, and it was found in Wyoming since 1956. It first showed up apparently in a moose, and now they broke the news today. I guess it's near Elkhorn Mountain, right in that range. 50 cattle infected, died. Now they're fearful it's going to spread to other animals and people. The Wyoming Game and Fish Administration has come out, the commission, and they're telling people don't pick up road animals, don't pick up anything dead, stay away, because that spreads to people. It's deadly. I haven't heard of an anthrax case to deal with in a long time, and I certainly would not want to eat any animal from any of that area. All right, I just don't know. So the market gets scared right away. And I got scared when I read that. And what are they going to do about it? So that becomes interesting. And how did it come about again? When's the last time you heard of anthrax? Not there. You're getting the typical wishy-washy moves in the grains as the market fights right now off the first bounce as the harvest gets going in the corn market. I doubt there's a lot of upside. There's simply too much corn, as I'm seeing. All the different firms are coming out now with their numbers, so be ready for those. They are coming at you fast and furious. So as we look at the S&P, if the market responds negatively tomorrow, I think you're setting yourself up for a test then of the 18-week moving average. Now, if you look at this market, you have to go back a year ago almost to the last time this market was underneath. And notice how the market reacted. Pay attention to history. It doesn't always repeat, but it can. Notice the time frame, September into that October period before the market got friendly again. I'm looking for this period, that pattern one more time. I think the U.S. economy will slow down. I think that if you're looking in the aftermarket and you're seeing how corporate earnings are coming in and where the forecasts are, if you're not a major beat, your stock goes down 1, 2, 3. Costco did well today, so good for them. When we look at this bar chart, look at how the market's leaning over all of a sudden. All right? Now what we've got is a pattern of a higher high and a lower low. Well, you'd have to go back up through that high on the current pattern to even get something going. And I don't know what that would be. But if you just rally and fail, you'd have a full-fledged sell signal. If it rallies, I'm looking for the resistance at 55.81. If it drops down, I'm looking for the first support at 54.37, with the Bollinger Band right at that number at 55.07. So here's your support levels. Let me put them the right way here. It's really 54.58 is the Bollinger Band. Since these two are together today. This is where the support is, about 20 points apart from each other. But there's nothing friendly on the chart, and I think that's important. The seasonals are down. I don't like what I'm seeing. The only thing as a market technician I could hang my hat on and say, hey, I don't want to sell it on a break, is that it's oversold. Got it? Work out of that condition or embed, and you get another story to play with. When we look at the NASDAQ, same thing. We have been talking, could the market get down to the Bollinger Band and the 200-day average? Well, right now it looks to me like it will if this report tomorrow is bearish. You have lower highs, lower lows. I think the pros are selling right here. I don't like the dollar risk involved, but that's what I think is going on. In the Dow, this is the first time we're back underneath now, the 18-day average. It's not trending. You have no trend. When you broke down right here through this low, that was the game. Now, something else. Notice how you had an outside day down, you went up, but you didn't in the past 2 days, you didn't ever make it to the top. That's what I want to say. You didn't get to the Bollinger Band, then you took out that low. It's a failure pattern. When you normally capture the market and move back up, it just didn't work. Okay. You don't have a trend, but you have momentum down. Same in the Russell. So nothing's friendly on the stock indices here. And if you were to say, Ira, is there a reason to go long? I'll go out in plain English. No. Does that mean the market won't rally? No, it could. Does that mean I'm looking for potential sell signals? Yes. In the 10-year note, well, you've got the sideways action you've stayed in, but this could be a launching ground. Always be careful when you narrow in order to come out of these narrow bands, the only way you come out of them is latching on and pushing on a Bollinger Band when it's overbought typically. And that's just what this is trying to do. So I don't know if it'll succeed in it or not, but it's trying to do that. When we take a look at the 5-year, same thing. It is not a buy signal, in my opinion, ever at a Bollinger Band, but certainly there's no sell signals in sight. In the dollar index, I'm looking for a bounce to get short on. If the market can come back up, make another run at the 18-day average and fail, I think you're going down to this level, and it wouldn't surprise me. It gets scary. I have some counts down longer term to the 96, 9700 zone. If you use our price counts at Linn Group, you get some long-term counts that are all and out scary on the downside. And price counts are neat. What they do is they come in after a trend is set up. Where might the market go? It's proprietary to us. We don't explain how to do it, but we let you use the counts on our charts. So it's something you might want to get on a free offering in our QT platform. Higher lows, higher highs. If I'm bearish on the dollar and can't get what I want there, I have the shot here to buy the euro. 50% of the dollar weight is made up of the euro. So if you can't get the dollar on your terms, you go to the euro is one way. If you're buying this, it's the equivalent of selling a good chunk of the dollar. If you buy here, what I'm not keen on right now is the risk is over $600. If you were to buy at 110.99 or 110.11, okay, whatever you want to come in there, 111, you have to have a stop at 110.32. I don't want to risk 60 some odd points. But you've come down, you're no longer oversold, and you're trying to churn in there. In the British pound, you're working off an overbought condition. Ideally, and that's the key word, ideally, I'd like to see the market get back to the 18-day average of closes to make a better decision on what to do. Certainly an overbought condition doesn't excite me. Bitcoin, I remain in the bear camp, have been. Notice the pattern's been lower highs, lower lows. You came in through here, couldn't even get to the 18-day average. Now you're starting to run against that Bollinger Band. It is not the spot, in my opinion, to be adding new shorts against the Bollinger Band when you're oversold, but there's no reason to be bullish, and you're very likely to get here a bearish crossover where the 18-day average gets under the 200-day average, so you got to pay attention to that. As for the energies, I think it's looking at the malaise going on in China, looking at the U.S. maybe entering a recession. Tell me why you'd want to buy crude in that environment, all right? And the market's got plenty of supply at this point, and we could even get something else that could surprise the markets. None of us expect it. We pray for it. Could there be peace in the Middle East? I mean, at some point, something's going to give. I don't know what's going to make it happen. I've given up on all that. I think the brightest minds have given up on it. And, Biden keeps saying he's going to give him a take it or leave it deal. I don't think anybody's told the president to turn on his hearing aid. They left it. It's gone. They'll do what they want to do, President Biden. And that's where you're at in that type of market right now. Same in WTI crude, the heating oil. Winter's coming. The lower it goes now, the more excited I get for an ultimate bottom. You will get a seasonal play often in these markets. I am bearish nat gas. This is a bullish formation right now. throwing out it. I'm waiting for the failure on the upside to get short. Long term, look at what the market does seasonally. It's a strong down move. If I don't get short, say la vie if it goes higher. I'll wait for that turn on it. There's just so much natural gas around that you get these bounces, but I don't think they're going to last very long. Remember, you came down all this way, you had a bounce, you're playing here. You could be a 180 market before this is done. Again, I want to remind everybody, our sale coming to an end right now to take advantage. All you need to do at any point on any part of the video, move your cursor up to the top. There you'll see an icon. Call my staff. There's an email I'll send out in the morning if you're on my mailing list to everybody. You have basically 70 hours left after this, and that sale's gone. I've never done a 3-month special. It's getting a nice reception. I'm Ira. You have yourself a great evening. Catch up with you in the morning, and we'll be talking at that point the jobs report.